Welcome to TradeTheMBI.com. This is John. This report is for the 30th of December as we approach the end of the year. Hope everyone had a great Christmas break there, but back at it for another day or so here, and then it's another break for the new year, and all eyes will turn on to the transfer from Biden to Trump. It'll be an interesting one. It's going to take some time before we get the actual totals here for how much spending in that was done during the election and that to fluff the economy, but it looks to be pretty severe. I mean, the number of new government employees that were added on, as well as bringing in of the migrants and giving them and the NGOs money. The idea was to goose the economy, but again, we get into this non-productive use of deficit spending, which is just borrowing. And what did they get for it? Not a whole lot of anything. In fact, you're not going to see any benefit from a GDP on any of that, and it's really just catastrophic from a standpoint of going forward for the economy. And you can see it's reflected here, not so much in the market because they're devaluing the dollar, and that's pretty much what we've seen from the market move. It's not about anything positive. Now, yeah, you have a warning here, MBI white spike coming up over magenta, but magenta is still leading yellow. So as long as that's the case, probably not as severe. What we're looking for is any move of magenta below yellow. That would signal a much deeper crisis. You can see we still don't have a huge amount of short activity when we look at the DOC standpoint. And you got the crossover of green having dipped with the orange here spike. Now that usually is enough to stabilize things. Still relatively negative from a shakeout, but the severity of it, there's nothing really happening at this particular time that's all that catastrophic. A lot of this is just nonsense. Now, when we look at it from an NQ standpoint, which had been leading things, a little bit more problematic because that shows a bit more of a decay, and that's simply because the Nasdaq outran the S&P there for just a little bit, and it's going to even out. But you can still see here, even from a cyan standpoint, you're facing that cyan green meeting, and what happens here is critical. Rejection with cyan moving higher, the market's going to start falling fairly quick, or at least won't likely hold the support at this particular stage. I think that things are relatively stable as far as you don't have anything major erupting at this particular stage. The world, though, obviously is in a precarious state. You have Syria, which is still completely an unknown, though it doesn't seem to be spiraling completely out of control, but that could change at any minute. Obviously, the Ukraine conflict, but the reality of other countries is you have the destabilization. Canada is on the brink of change of leadership. Same thing in Europe, and these are all directly related to Trump coming in and the policies. And, again, this is where the market's going to have a hard time separating rhetoric from reality. And until it actually starts to take place, I think that some money is just going to be frozen for the time being. The bond market is not particularly happy with the situation, and rightfully so. They're going to demand higher rates because they consider things under higher risk, and that's a reality. Now, you're not looking at any benefits from an inflationary standpoint because oil's not really fading off at this particular stage either. So this is where you're going to see a lot of incongruencies, I think, is the best way to look at it as far as trying to find a direction. And I think the market is really going to move laterally from that, if not lower. You're going to have some kind of positive spin on things to justify some kind of increase. And I don't know how much more they can fudge numbers going into the end. I think they probably will, simply because that way it'll look more catastrophic when Trump comes in. And it'll seem like everything turned to a disaster after he came in. But you can see even from the euro, they're struggling to try and even just keep this above par at this particular over the dollar. It's not going to be successful, but they'll continue to play it. And of course, there's a lot of European companies very concerned about the tariff idea, and even a modest move will be catastrophic for them. I mean, particularly in Germany, where this push towards the green energy realities of everything has really decimated their manufacturing base. And so it's self-inflicted wounds, which, of course, other countries are more than happy to accept. They loved it when America was doing it, and allowing trade where they had unfair advantage. And if that changes, you begin to see the respect that the world has for the powerhouse that is the American engine, and you give them a playing field that's level, or at least less restrictive and less underwater, and they're going to outperform, and that is going to be devastating for the world overall. So you got to keep that one in mind. From a gold standpoint, not able to do anything, even though inflation is still rising. Don't kid yourself about that one. Has not changed. Bitcoin, after its nice run, not really doing a whole lot of anything. It's just stabilizing, and these mid ranges absorbing that until it gets an idea of also where things are headed from a policy standpoint. So you can see the paralysis that develops. Nobody can really make a fundamental choice. Now, there's going to be some people that go out on a limb and say, well, I believe this is going to happen. But when you look at the majority in Congress, it's not going to be so simple. Until the U.S. gets to a state where you require voter ID for elections for federal office, I think you're going to always continue to have these kinds of shenanigans. I don't think it would be as lopsided if you actually could prove who was voting. We see the differential between blue states versus red states that require ID. The numbers are dramatically different. So it's an interesting one, and no one really likes to talk about it, but it's definitely there. So we'll see if something like that is. And of course, it wouldn't be surprising to have the opposite side say, no, we don't want that. From an ETH standpoint, they're a little better than Bitcoin is overall, and of course, they need regulatory change in order to salvage ETH, and to a lesser degree Bitcoin, because again, Bitcoin is perfect for just parking some money temporarily, and definitely better than bonds at this particular stage. You can see from an intraday standpoint going into the weekend there, yeah, that was just 100% selling, and then late in the day, bring it back up just to thwart, any of the call action that had started to build up for the beginning of the new week, though it doesn't seem to be holding up very well here in the pre-market of Europe. So that's the long and the short of it. As always, anything relevant, I'll put in the Skype chat. Already prepared indicators for next month, so we're all set to go. As always, trade well. Have a good one.